Good morning, you chart addicts. This is your crypto daily pulse for January 5th, 2026. Look, if you're searching for some polished financial news show, you're in the wrong place. Here, we cut through the noise and we follow the money. All right, let's dive right in. Forget the fancy algorithms for a minute. Today, we're talking about the raw signals, the panic, the geopolitical shocks that are really driving this market. And we're kicking things off with a massive shockwave on the macro level, because what's happening right now across the globe is rewriting the entire story for Bitcoin. So over the last 18 hours, the world got shaken up. The Maduro regime in Venezuela collapsed, followed by U.S. military action. And this has sent some serious ripples to the traditional markets. Now, the big rumor buzzing around is about shadow reserves getting activated. We're talking about off-the-books, national money potentially flooding into crypto. And that's what's fanning the flames. All this chaos, it's basically a real-time stress test for Bitcoin. We're watching the narrative shift right before our eyes, from just another risky tech asset to a true digital safe haven. So, how did all this chaos actually translate to the charts? Well, it's a story of a market that is completely and totally divided. Bitcoin absolutely surged. As capital ran for cover from all the uncertainty, it found a home in BTC, pushing the price straight past 93 grand, with a gain of almost 2%. But then you flip over to Ethereum, and it's barely holding on. This split tells you everything you need to know about where the market's confidence is right now, and it's all in Bitcoin. And believe me, this division gets even crazier when you dig into the altcoin market. It's really a tale of two completely different worlds right now. So here's the key takeaway. Capital is rotating, and it is rotating hard. Money is gushing out of last cycle's narratives, like the old meme coins, and pouring into hot sectors with a real story, like AI. This isn't just random market noise, it's a flight to quality. It's why coins like Render are posting these huge gains, while meme coin wallets are just getting slaughtered. It's a brutal, brutal rotation. You know, there's really only one word for this level of division and capital movement. It's not a dip, it's not a correction, it is a full-blown riot. Okay, let's peel back another layer here. We're going to look at two super important indicators that tell us exactly what's bubbling just under the surface. First up, Bitcoin dominance. Basically, it's the percentage of the entire crypto market's value that's held in Bitcoin, and it is climbing fast, almost to 59%. That tells us that new money coming in is playing it safe. It's going straight to the king and bypassing most of the altcoins. And this just perfectly captures the mood of the market. We are in a risk-off, safety-first mode. The whole digital gold story is winning. And until we see this dominance number start to fall, a big, broad altcoin rally is just not in the cards. But at the exact same time, look at this. The Crypto Fear and Greed Index has totally cratered. We are sitting at 26, which is deep, deep in extreme fear territory. And right here, this is the central conflict in the market today. You've got retail investors who are absolutely terrified, but at the same time, the smart money is decisively moving into what it considers the safest asset in the space. That tension is everything. So while the retail crowd is panicking, let's check in on what the biggest players, the whales, are up to. Because, spoiler alert, they are making some incredibly bold moves. No surprise here, Michael Saylor's MicroStrategy just snapped up another 1,287 Bitcoin. That's well over $100 million. But it's not just a Bitcoin story. You've got other giants like Tom Lee who are seeing a bargain in Ethereum and are buying that up too. The message couldn't be clearer. The big money is buying, not selling. And here it is, the signal from Wall Street itself. Goldman Sachs just upgraded Coinbase to a buy. This is huge because they aren't just betting on the assets, they're getting bullish on the core plumbing of the entire crypto economy. Just let that sink in for a second. When one of the biggest, most conservative banks in the world, Bank of America, starts telling its clients to put a chunk of their portfolio into crypto, that's not just a headline. That is the clearest signal you will ever get that the crypto winter is officially, definitively over. Okay, so what does this all mean for the next, say, 48 hours? It's going to be critical. Here's what I'm watching. The battle lines are pretty clearly drawn. The bulls have to defend 90K. If they lose that level, we could see a quick, sharp drop down to fill the CME gap around 88K. That's just a price gap on the futures chart, but they almost always get filled. And a drop like that would absolutely torch the over-leveraged traders. But if they hold 90K, we're looking at new highs. And the trigger for that next big move, it's almost definitely going to be a macro event. All eyes are on tomorrow's PMI report when the U.S. market opens. It's a key indicator of economic health, and any surprises there could really put the market's conviction to the test. Which brings us to the final and most important question. In a market this chaotic, this divided, with geopolitics on one side and huge institutions on the other, what's your next move?
Because in a market that's just drunk on panic and fear, staying clear-headed isn't just some nice advantage. It's the only edge that actually matters.